Hi all, welcome to the daily charts and our over the weekend Fibonacci analysis of the price action in Bitcoin, and we're going back basically to April lows. In April we recorded the lows of the year. At that time the price was, as you can see, 74,500. I'm rounding the numbers up so it will be easier to comprehend. So we traded as low as 75,000 in April, and then we started to move higher thanks to President Trump's support, and moved higher and higher, and anytime we had a pullback that was fine, and higher, and then a deeper pullback, and then we started to basically reach all-time highs, tested all-time highs, tried to break all-time highs, and then this disaster event happened, which was basically the unfolding or unraveling of those super leverage positions, and the price dropped in a couple of hours from 126 to nearly 100,000. So that was a rough event. So a lot of hands, a lot of traders basically ended up, I'm guessing, not coming back to the market, because when you are being stopped out, that's it, you don't have any funds anymore. So I don't know if out of 500,000 accounts or maybe 5 million accounts, who knows what the real number is, how many came back. I'm guessing not a lot, okay, but it doesn't really matter, because we rebounded, came back, moved higher, and now over the last basically 1 month, something very, very clear and technical happened, and this we started to work this, if you observe, higher lows. And higher lows is a clear downtrending pattern, and we discussed it on our shorts edition a couple of times. Again, I'm, as everybody else, looking to post long trades, because that's what everybody wants to know. Where's the next entry point? Now if we go back to the Fibonacci, and if you remember, guys, some of you will remember, I posted this 112 long pattern, and it ended up, instead of making it to the highs of the year, which was the target, making it only $4 $4 up from 112 to 116, and sorry, it was $4,000 up, not 4,000 up, but 4K up, and coming immediately back down, and that was shameful. So basically this move was a failure. Now I don't remember what was the stop loss. I think it was $1 or $2, but again, it wasn't a losing trade as much as it was clearly not a winning trade, and the target was, as always, the aim is the highs of the year. Okay, so now we're facing this lower high situation, and basically you try to buy a downtrend, you're guessing or trying to fish with limit orders. The Bitcoin either at 101, either at 100,000, maybe at 95. Now it is at 96, as you can clearly see. So the idea here is, now anybody that wants to buy cheap. So here it is, it's 95, but you're buying cheap, we're buying cheap on a downtrend. So how cheap is really cheap? Are we going to come back from all-time highs to the lows of the year? Are we going to stop at the 75%, I'm rounding things up, Fibonacci? So, or as you can see, overnight we stayed and got some support at 62% pullback. Again, the pullback is not in the price of Bitcoin, but it's on the move. So if the move was from 75 to 125, that's a $50 move. Okay, so out of the $50 move, 50% is $25. So if you go 125 to 100, that's exactly 50% Fibonacci, because the whole move was $50. So if it, again, $50 up, and then down 25 minus 25, that's 50%, and there you get the 50% Fibonacci, and this is how it was. Anyway, now we got some support here at 94,000. Now again, we are not we. I mean, most of the market is a buyer. The only thing that the only ones that can short are the leveraged, or basically those who have accounts on Binance or Kraken, and they can leverage their position, and you can short. Most of the market, I think, is not in a position to short, but there are a lot of sellers. Who are those sellers? I don't know who are those sellers. There are so many rumors. And reason why we're moving down. What is basically the fundamental reason that we're moving down? I think the fundamental reason is these guys, those who are now not in the market anymore. Maybe millions of accounts, maybe I don't know how millions of accounts or 500,000 of accounts are not coming back, and this positive hand that basically was eliminated is missing out, or basically is not in the market to support the sellers. And I am guessing the sellers are institutional sellers. I don't know again who is really behind this move. And again, it's not an aggressive move in terms of the history of Bitcoin. If you go to the all-time chart, you'll see in Bitcoin huge. This is from 125 to 90. That's 95. That's $30. That's roughly 25%. This move is roughly a quarter of its value. So Bitcoin lost a quarter of its value in 5 weeks. It's rough, but we've seen worse. I mean, way worse. At one point, I think there was, I don't remember if it was 2014 or during COVID, the price went down 80% from all-time highs. So we're far away from that scenario. Keep in mind that at that time, institutional traders and investors, which are now maybe part of the problem, did not support the price action. It was all retail, or mostly retail. And again, the leverage in this, an instrument is great when it's moving up, but it's poison when it's moving down, because all the leverage positions have very, very short span in terms of tolerance or risk tolerance. The risk tolerance on a leverage position is very, very low versus a normal position. When you're not leveraged, most of us won't have a problem to see a 25% pullback in crypto, because this is crypto. I mean, if you cannot stomach 25% or even more in crypto, again, it's not like you cannot be investing or trading in this instrument. This is again an instrument that can go up in 6 months 75%, can go down in a month 25, 30, or 50%. So it doesn't go only one way. So the idea here is that you have a stomach for tolerance only on the upside. It's ridiculous. So again, anybody that's leveraged has zero tolerance. Maybe that's the reason. Maybe some institutional sellers are selling. Maybe. The idea here is that we are technical traders, and we need to find an entry point. Now, where is the entry point? That's why I drew the Fibonacci, because I'm trying to figure out myself where to post the next trade. To post it for you guys at 95, at 88 with $3 stop loss. Where? So the idea right now is that I don't know. Right now I don't have any clue, and I cannot trade the Fibonacci retracement, because again, let's say we buy at 94. According to the Fibonacci, the stop loss is 85. That's a 10%. So if you want to trade the Fibonacci, that's a 10% pullback. And in terms of risk reward, 10% is too much. I want to trade with 2%, 3%, 4%, but not 10%. 10%, if you start losing 10% on, I'm not talking about leverage, of course. If you leverage and you lose 10%, your account is gone. But let's say you're not leveraged, and this is the idea here, is even 10% is a lot. Okay, 10% is a lot for midterm. We are not long-term investors, buy and done. So we want to be active, but we want to make sense of, take advantage of technical analysis, technical entries, and risk 1 to get 5, maybe 10. So if I'm risking 10, I need 50. Okay, can I count on Bitcoin to let's say I'm buying at 90? Can it go back to the highs of the year? Maybe, maybe not. The idea here is that we don't want to risk 10% per position. We want to risk, like I said, 2%, 3%, but not more. So again, time will tell. There's always the possibility of a V-shape reversal. And I remember a couple of years ago, I don't remember exactly when, I bought a position at 40, added to that position. It wasn't a big position. It went down to 20. Then from 20 it went up to 100,000, and I sold my position at 100,000. But before it reached 100,000, I said to myself, okay, I want it to go down not to 20, to 12. Why? Because I was so greedy to buy cheap, and it went down to 20. And of course I didn't add to the position, and it went up to 100,000, which was fine, but my plan obviously didn't work out. So the idea here is that we want to buy cheap, but how cheap is cheap? And there's always this, like I said a couple of minutes ago, the V-shapes are a killer because you cannot buy a V-shape. You miss the market for 1 day or two, and this happened to most of the traders. We have other things or a life outside of Bitcoin, and if you don't have a limit orders in the platform, then the market can run away 4% or 5% in 1 day. It happened many times before, and then you think, okay, I'll wait again, and it's not coming back. So the price is not coming back. Bottom line, if you want to summarize this video, those who are looking for an entry point can use the Fibonacci retracement if you have the stomach for it. Can use technical support. We don't have a great technical support. So I want to use technical support on one hand. I want to use round numbers. The other hand, I want to use low risk and Fibonacci. So all of those factors, or at least some of them, in order to figure out the next entry. Is it going to be 95? And we can use 90 as a round number. We can use maybe the Fibonacci, this Fibonacci as support, buy at 97, and use the 94 as support. So right now there's a small question mark, but overall in the market we have a big question mark because, again, the trend is lower, and we've seen pullbacks, and now the pullback is 25%, pullbacks that are upwards of 80%. Again, we are not facing this type of COVID situation, not yet at this point. So again, if I want to summarize, my idea is at this point not to post new trades. All the long trades that I posted obviously failed, and let's wait. That's my idea. Thanks for watching. Do like and subscribe if you like this type of commentary. Thanks for watching. See you in the next video.